Hello everyone, I am Hassan Ayub and welcome to Let's Invest Right. COVID-19 impacted many of us. Many industries were drastically impacted. They had to stop their operations. And similarly, the impact was seen on the stock price. The stock price went down significantly. Some of the companies and industries have still not reached the pre-pandemic level, and that provides us opportunity for investments. But now, with the vaccine out, the investments would be more reasonable and the risk would be much lower. With the supply chain problems being solved and vaccines being distributed across the globe, now we could see light in the end of the tunnel.
Welcome to Let's Invest Right, guys. My name is Farooq, and today we are here to discuss about a company which has got a lot of potential to grow, which is one of the largest non-OEM aircraft parts designer and manufacturers of aerostructures around the world. Now, it has got the market cap of more than $4.9 billion. It has got clients such as Boeing, Airbus, Bell Helicopters, and Rolls-Royce, and many others. Now, its clientele is very strong. When it comes to aircraft manufacturers, they definitely recommend and they have them in their list when it comes to purchasing of non-OEM spare parts of aircraft. Also the aircraft structures. So and as I have discussed, they are the largest when it comes to the only two major suppliers of commercial aircraft such as Airbus as well as Boeing.
In this video, me and Farooq Khalid will discuss about the company, what the company does, what the revenues are, what the stock price was before the pandemic, and what we expect the price to be. We will also discuss about the future earnings of the company and why we think this is a good investment.
Now, this company is traded in a stock exchange with the name of SPR. The symbol for this company is SPR. What we have seen in a couple of years that since, as I have mentioned, that this company is the largest provider of spare parts to companies like Boeing and Airbus. But specifically, if you would see its correlation with Boeing is very strong. So we have seen the downfall of entire aerospace companies, airlines. So of course, all the airlines definitely would buy either from Airbus or especially the commercial airliners. They would buy either from Boeing or they would buy from Airbus. And when that demand has gone due to COVID, the orders were cancelled, the flights were cancelled, the new orders were cancelled. So ultimately, it impacted all the companies in the chain. So was also companies like SPR, Spirit AeroSystems, or companies like Rolls-Royce. They were also impacted much more hardly than the airline itself. They all have cancelled their orders. But particularly with Boeing, we have seen they were going through a very tough time, even pre-pandemic. They were going through some fatal accidents and the cancellation of or halting of their commercial airliner Boeing 737 MAX. And since that commercial airline was having a lot of problems and they were put under investigation and their orders were cancelled, the direct impact was seen with SPR. And if you could see the correlation, whenever the price of Boeing goes down, we would see, normally it is seen that SPR would see a great pressure on its price. Now, it makes a lot of sense because if we see a news that the airline contract is cancelled, the airliners cancel their contract for Boeing 737 MAX, we would see the manufacturer of spare parts or its structures manufacturer, SPR, it would see also less demand from Boeing itself. So right before the pandemic, when these accidents were seen and the grounding of Boeing 737 MAX was taking place, and it was grounded by all the major airlines around the world, the price went as low. The price started falling for Boeing itself, and was also seen a great pressure to SPR. But as soon as we have seen the pandemic, which was increasing like anything, and the overall travel and tourism was put on hold, and we were not seeing what is going to happen in next few months or years. So the price significantly dropped, and it dropped more. Even it reached less than $17 per share. And however, with some good news of vaccine coming in through, and the travel started again taking its grip, not exactly the same as pre-pandemic, but somehow we have seen some lockdowns which were taken off from some countries. Still we are having tough time. We are having third wave and concerns from around the world. Still we have seen with some SOPs being followed, again airliners started flying back, and with that we have seen prices of SPR also, along with airlines and the manufacturers like Boeing and Airbus. They all started picking up slowly and gradually. But SPR, with the news of Boeing 737 MAX, which was cleared by the regulators in US and around the world, and again they were Boeing was given order by big airline companies and supported by the government. So we have seen a strong comeback from this company, and from 17 it came back to 36, and then it's now currently trading in the range of 40s. Now it was trading before you can say pre-pandemic. It was also trading, as you can see on your screen, 92.04 was its highest price, which was in the month of November, which was pre-pandemic. And we have seen from there, and then it started falling, and it reached as low as $17 or $18 for a few days. And however, it picked back, it came back, it retraced back to in 40s. Still, if it reaches back, we have got more than 40% return in this stock.
Talking about the revenues of the company, it was a forgettable year for the company. The company made a revenue of 3.4 billion in 2020 versus 7.9 billion in 2019. The company delivered 71 ship sets compared to 606 in 2019. Overall deliveries were lower. They delivered 920 only versus almost 1800 in 2019. But one of the good things about this year was that the company was able to diversify its revenue. Boeing used to be the largest revenue generator for the company. In 2019, Boeing generated 74% of the revenues, while Airbus was 16%. In 2020, Boeing contributed only 48%, so almost half of it versus 3/4. On the other hand, Airbus revenues were increased by to 23% versus 16%. And not only this, in the future, the company expects the revenue of Boeing to be lower. This would be helpful in diversifying the revenue of the company. Airbus revenue would remain at 23%. However, the defense portion of the revenues would increase from 6% in 2019 to 18% by 2021.
Guys, another important thing to discuss is its revenue by its segments. We have seen significant decrease in its revenue by segment. When we talk about its segment, which is fuselage, we have seen in 2019 this segment was having operating margin of 11%, while it was decreased to minus 26% in 2020. For the other segment, which is known as propulsion, it's in 2019 the profit margin was 20%, operating margin was 20%, and in 2020 it was negative 5%. While when we talk about its segment, which is wing, in 2019 the operating margin was 14%, while in 2020 it was negative 9%. Now, of course, it is all because of excess capacity cost, restructuring cost, and we have seen the revenue and operating margin were reduced because of cancellation of many orders from Boeing because of its fatal accident, being grounded by the regulators. We have seen many orders of aircraft, airline industry canceling its order. When they canceled their order with Airbus or Boeing, the next chain which was impacted or affected was companies like SPR, which used to provide all the parts. So overall, their operating margin was definitely reduced and impacted badly because of this pandemic and this fatal accident.
One of the main things that we look when we are making investment in any company, that the company is undervalued. You would buy anything that's being traded at a lower price than what its price should be. And this is the case with SPR. The company currently is traded at $47.9. However, the fair value is expected to be around $76.7. This means it's largely undervalued and it would be a good investment. And if the company comes to its fair value, you'll have good returns on your investment.
One of the major concerns with this company in terms of when we are going to invest in this company is we have seen significantly, as you can see on your screen, debt to equity ratio, which has seen tremendous. We have seen debt rising, and we can see on our screen this graph which shows that with the period of time, the debt has increased as compared to its equity. So this is a bit of a concern. But yes, since we have seen pandemic hitting these companies really hard, they need to survive. They need to fulfill their operational costs. They need to keep their factories running and make sure that this company is still on ground and giving its services. So we have seen around the world, all the companies actually, they have increased their equity, they have increased their debt as compared to their equity.
Let's now discuss about the future earnings of the company versus the market and the industry. SPR is expected to increase its revenues by almost 18% versus an industry of 6.4 and the market of 9.3. So hence, in terms of revenues, the company is outgrowing both the industry and market by a far margin. Comparing this with the earnings, the company's earnings are expected to grow by 73%, while on the other hand, the industry is expected to grow by 20.5% and the market around 18%. So in terms of both the earnings and the revenues, SPR would beat the market by a fair margin. Looking at what analysts are saying, out of 23 analysts in the month of April, 5 had said it's a strong buy, while 8 have said to buy this. Overall, the recommendation is around 2.3, which is between buy and hold. Analysts expect the price to be as high as 65 in the next year, which would give a return of almost 20%. However, if it reaches the pre-pandemic level at the price of 92, then you'll have 2x of your investments. You'll get 100% return of your investments.
Just to discuss very quickly about future return on equity. As compared to the industry, it has got more potential, this company. And the return on equity, as you can see, in 3 years, is the company is willing to return on its equity is 34.8%, whereas compared to its industry, which is only 8.8%. So the SPR's return on equity is forecasted to be high in 3 years' time, which is 34.8%. Now the question is, why Spirit AeroSystems or SPR is this still a buy or long-term value stock? It's a very tough question to answer. But when we see its growth, when we see its dependence on companies like Boeing or Airbus, it is true that Spirit AeroSystems SPR is in long term, it has been showing a lot of dependence on once it was owned subsidiary of Boeing. So definitely it has secured so many contracts from this company Boeing, and then its structure is designed in a way that it works more for the company Boeing than to its other partners like Airbus or Rolls-Royce or Bell helicopters or Mitsubishi itself. But however, we have seen its upcoming contracts with Airbus and other divisions, which makes it more promising rather than its dependency on a single company like Boeing. Now, in a very short term, as we have seen, its direct correlation with Boeing company, and especially with its disputed aircraft system, Boeing 737 MAX. As we have seen its comeback, as we have seen regulator giving a green signal for this aircraft, which has already started securing some reorders from big airline companies. We can see it is one of its major provider of its spare parts and other technical parts. So we would see SPR growing back with this concept that Boeing 737 MAX is coming back on track. It has been given a green signal. It is having this company has contracts with not only with Boeing but other well-known companies around the world. They don't have much competition. Very few companies are so strong in terms of providing support to aircraft manufacturers. So again, it's there is a risk, definitely. However, we feel these companies are very strong and definitely being supported by these very strong aircraft manufacturers. Guys, thank you very much for watching our video. I hope you have liked this video, and if you haven't subscribed yet, please subscribe to our channel, and if you would like to trade and make money in such stocks, which we are trying our level best to come up with some small research on it and show you how you can actually what kind of potential is still there, what kind of growth is there, and you can definitely go and click on the below link and join this platform, which offers all these stocks, and the best part is it's commission free, and the user interface is definitely very good. Thank you very much for watching us, and keep watching all our videos. Thank you. Take care. Bye bye.